Good afternoon, guys. Monday, early morning, not early morning, say morning before market opened, I had posted the weekly outlook and how one can trade in Nifty intraday. And also I had provided my comparison analysis on Nifty and Bank Nifty. So let's go ahead and do where and how we could have taken trades in today's Nifty and see how market might open tomorrow. All right, let's start. And again, this video is for education purpose. Please do use it. And since I'm an intraday trader who trades specifically on Nifty because of my work commitments, so I believe that whatever views I share would also benefit for a lot of other traders who are working like me. All right, let's start. Now, as suspected or as we thought, Nifty opened within yesterday's range, right? So Nifty opened at 18,241, and the opening candle itself, first 5 minutes, was a big elephant candle, very big candle, closing below the lower BC, bottom circuit, or the lower CPR. Now, whom does this lower CPR belongs to? So I keep telling this because whoever follows pivots should understand that the lower CPR always belongs to sellers. The upper CPR always belongs to buyers. The in-between zone, until unless it is very wide, the in-between zone is a dead zone. People should not take any trades. Why? Reason being the CPR can act as support, can act as resistance. It is the important level in pivots, right? Once it broke, one could have taken a trade at the low of the first candle targeting S1 pivot. This is how generally all pivot traders does, provided we don't have any resistance on the left hand side. Now this morning in our Telegram channel, I had mentioned if the market opens here, this peak, which is 18,220, then this peak, these are all double bottom, 18,169 and this one, 18,147 and 18,139 might act as support. So I was carefully watching whether market can provide support for this when the fall started in the opening candle itself. But all these key support levels were broken downside and the lower CPR was broken. So I knew for sure market is going down, and anybody who had taken a shot immediately after the close of this 5 minutes probably might have lost around 15 to 20 points in this pullback. But understand, early morning opening is always volatile because of high emotions, but also there are high risk to reward trades. So but what was the stop loss when you enter at the close of this candle? The stop loss I see, the way I see the stop loss is this one. Usually people keep top of the CPR, which is very wide stop loss. So I would keep the recent swing highs, which is nothing but the central pivot range. If the price would have pulled back above central pivot range, I would have exited and I would have again taken a trade if the low of the second 5 minutes would have broken downside. Until price sustained above the upper CPR, my view on the short side wouldn't have changed. That is what I'm trying to communicate here. All right, after this, okay, market came down and immediately we started facing the doji. I mean, this is how the market works, right? It never goes in one straight line. It always goes up and down. But what was the key for us to go short is the ongoing trend. One is the ongoing trend since last 5 days. If you see, always ongoing trend. And then the daily CPR, descending CPR. What does a descending CPR says? Descending CPR always says the trend is downside. So, and then the lower CPR belongs to sellers. The opening 5 minutes broke and the next and broke all the important swing highs while coming down. So this was a high probability trade targeting S1. Now here, watch. If somebody who would have waited for 15 minutes and then wanted to take a trade, All right, it's not a good risk to reward, but still I want to tell you how one could have made a decision. Now, after a continuous dojis, what does doji represent? Highest level of indecision between buyers and sellers. So after a doji, who made the decision? Sellers made a decision to take the price down. After this red candle, if you entered here, this big red candle, I think 18,250p, if I'm not wrong, 250p or 200p. That one gave around 30 points from till here to here. Okay, in a span of 15 minutes. That is momentum, because understand these are vertical falls. So this is one trade where you could have taken. The ideal trade according to me was here with the stop loss above central pivot range. All right, now this is very important. What are these shaded region? So if you understand pivots, all these regions are nothing but central CPRs, virgin CPRs. See here, this is a virgin CPR. While market coming down, this was the first virgin CPR. In fact, if you watch my videos, I always talk about virgin CPRs acting as a support while falling from the top. And if the price is moving from the bottom, the virgin CPR always acts as a resistance. Now this was one virgin CPR which is filled, and always virgin CPRs will be filled within next 1 week's time. The longer the duration, you need to forget, the lesser the importance of the virgin CPR. Now just see the beauty of virgin CPR. This one was tested, this one was tested, today this one was tested. So we still have two more virgin CPRs. Can market go down? No. So the shaded regions are virgin CPR. Market came here, broke S1. And if you know pivots, any price below S1, that is where the smart money comes in and takes the price to even lower or to the new level. Now here, yesterday's low is broken. S1 is also broken with this red candle. But why we cannot take a trade here? Because of this virgin CPR. And then these dotted lines are nothing but monthly low. Okay, these are monthly low. So this virgin CPR, as said, would have acted as a support, and that's exactly acted as a support. Now, if you know pivots again, above S1 in a daily trend, okay, this is intraday trend is down, but daily trend is still up. Now, why I'm telling daily trend is still up? Because price is above R1. If you see, I mean, before going to S1, I want to say this morning in my video, I had told you that the 20-day moving average or 20 EMA is a very crucial in daily time frame, hourly time frame. Most of the traders who does trading using moving average does, and I had informed you that price from here might attempt to test 20 EMA, take support and move up. And if you see, this is a daily time frame. 20 MA morning tested, moves up. So if you watch everything, and if you can remember this, they're very simple. By practice you start remembering, so you will get an opportunity here. So ideally how I want to trade is something like this. Okay, I have a 20 MA, so daily 20 MA or hourly 200 MA are the two key levels which I like to mark. This is 17,968, 17,966 or 68. Yeah, 69. So around same level. Okay, no fuss. So you see where exactly it went? Took support. Now we have a 20 MA, then we have a virgin CPR. Now will you take a shot here just because the price is below S1? No, you would wait for the next pivot, which is monthly low, to break and then target S2 safety wise, because these are vertical, very strong momentum, all of a sudden took support. Now here, watch this one. I keep telling there are 4 to 5 things which you just need to remember. Red candle broke and this closed at 17,985.2. The green candle 17,984, right? 85, 84. It's a gap down. Then not exactly 50%, but almost 50%. What is this pattern called? I'll mark it piercing pattern. Right, after a sharp Downtrend, you have a piercing candle. What does a piercing candle represent? PSC candle represent reversal because it's formed at the bottom. Now, can we take a shot? Most of the time, this is very high probability trade. You can take a trade immediately because the next price is above S1. The low of this should be kept as stop loss. If you had entered here and hold it, targeting CPR, you would have had another 50 to 60 points upside. So overall, if you see 17,995 and the lower CPR is 17,134. 995 100, so around 40 points it went up. 40 points, I'm not considering the upper CPR or this level. The target should be always lower CPR. We don't know whether market can reverse here because lower CPR belongs to sellers. So with this says something inside the option or ATM would have given you around 50 points, 40 to 50 points. That was good enough. After that, what happens? After that, we have a range bound. Market goes on top. And this is something which I would like to call out. Okay. Upper CPI belongs to sellers. But what do we have here? Yes, it belongs to sellers, but this range is a selling zone, right? Day before yesterday, it fell from here, and today in the same zone, market went down. So you have a selling area here, descending CPR, everything is there. So you need to take the clue from here. But still, when a CPR, upper CPR is broken, there are high probability that price should go and test at least the high of the day. It did not do. Now this is where I usually follow the Cambrilla pivots. Now keep an eye on the Cambrilla pivots just to observe. Now this is R3. R3, if you watch my Cambrilla pivot knowledge sharing session, you would understand R3 is always a selling zone, right? It's the definition of pivots will help you save money and take high probability trade. Yes, it broke above, you took a trade, went up, comes down and closes below, below R3, your selling zone, you exit immediately with a small stop loss. If it had gone and settled above R3 again, yes, you had a high probability trade to the high of today or testing for R4 Camrilla or R1 CPR, I mean R1 floor pivots. So this closing would have saved stop loss for a lot of folks. So that is one way how I use the combination of pivots and the Cambrilla pivots. And after that, market went into range bound. Now here it broke. Agreed, it broke, but you also need to understand previously market tried to break and went up. So this is a double bottom. These two are double bottoms, 65 to 70% of the time first attempt fails. Then market went down, came back, formed a triple bottom here, and then this candle breaks this one. Did we have a trade? And probably a scalping opportunity of 30 points was here, again with the ITM 18,150 or 200 PE. So we had around 20-25 points here because market was volatile. But the moment you saw this wicks pulling back, you should exit. Usually when market is volatile, trading in the late afternoon should be very you should be very careful. So usually I wouldn't have taken a trade. Even if would have taken a trade looking at this pin bar, I would have exited immediately. So these were the opportunities. First opportunity was here, second opportunity was here, probably a third scalping opportunity here. That is how you should trade in Nifty. Now if you move to Bank Nifty, I'll show you Bank Nifty. This morning I had told that Bank Nifty is much stronger. So if you see the Bank Nifty, so where did the Bank Nifty open? Above R1, above previous day high, the big red candle. And then you see a small inside bar. Now this inside bar and price opening above R1 should give you a hint that market is going to go up. Agreed, there was around half an hour where price went sideways, but this is again a double bottom. But with this, the stop loss should be previous day high or R1. From here, one could have entered long holding tight. Market went up above R4. It went very high. This was some kind of piercing pattern. Where did this close? 41,721. The opening was 41,722. Look at the piercing pattern at the high, asking you to exit. So from here, one trade done. You cannot keep on trading entire day. That is how a working professional should trade, scalping or catching the trend. So how does the Nifty outlook looks for tomorrow? Okay, Nifty outlook, this is the Nifty outlook. So this is the Bollinger Band. Price, as said, it has taken support on R1 pivot on a 20-day moving average as well. So, and if you see, it's sideways market. Maybe it might try to consolidate, but we have a kind of narrow CPR for tomorrow. Need to see whether market will go up or market will go down. So as if now Nifty is sideways, settled above R1. Since last 5 days are red, trend or the lookout until price settles above R1 pivot on daily time frame, the 5 minutes time frame. We have to be cautious. Sell on rise. That should be the method you should implement. See, sell on rise, and then around S1 we have a buying that is again based on 20-day moving average or virgin CPR. Once virgin CPR is tested, you can remove that. The test is successful. Now coming to Bank Nifty. So why I want to show you Bank Nifty, I'll tell you. So Nifty and Bank Nifty both are interdependent in our market, and today only few banks are pulling Bank Nifty high. If you see Bank Nifty daily time frame, after the initial uh, buying, there was a selling as well at the top. Now if anybody knows Bollinger Band, the standard deviation, positive standard deviation, or the upper Bollinger Band, lower Bollinger Band, any price closing outside of the Bollinger Band should come within the Bollinger Band before continuing the trend. Outside Bollinger Band, outside comes down. Now here price went way outside the Bollinger Band, and when you see the piercing pattern and this combination, any smart trader would go short, keeping his view down. That's exactly what happened today. Now can the market come down tomorrow? I don't know, but this price going above the Bollinger Band will also tell you that even if there is a gap up, market is not going to show you a lot of buying, because the buyers need more conviction. They need a correction in Bank Nifty. So expect a correction this week in Bank Nifty. Similar to Nifty, when you see Nifty, you will understand what I'm talking about. Bollinger Band, price closes above Bollinger Band, big gap up, entire candle closes above Bollinger Band. Did the price come down next day? No, there was even bigger gap up. But even this was also a gap up. Look where the price opened, 18,602. This is where price opened, then came down. So it cannot continue. Did you see a big buying here? Maybe a minor buying because this is a small candle, but it did not show any buying strength where bulls convincingly wanted to take the price to new level. Gap up, same thing. A small candle, buyers did not show any enthusiasm to take the price to new level. And these two candles brought the price down. And instead of continuing the trend, since these two candles showed us there were no buying and there were no positive news in the market, price just came down and tested the 20 MA. Now it is time for Bank Nifty to close within the Bollinger Band before showing further direction. Anyway, now this is Bank Nifty 15 minutes. This is, I'm going to remove the Bollinger Band. We don't need it. And we don't need pivots as well. This is tomorrow's CPR. So tomorrow we have a very narrow CPR for Bank Nifty, and this is the R1 and this is the S1. Say if tomorrow similar to today means price opening above R1. Nifty Bank, sorry guys, too many charts. Nifty Bank, where did the price open? Above the previous day range, above R1. You have a high probability of market going up. Now with this narrow CPR, so we have to anticipate either there will be a very narrow range day with no movements in Bank Nifty, and you can expect a trendy move if the price goes above the previous day range or below the previous day range, which is nothing but R1 and S1 pivot. I mean, that's all guys. There's no rocket science here. I'm not going to predict new levels. All you need to do is watching the pivots. Nifty, we have a little bit narrow pivots, but if you see, it's still an ascending CPR. So the outlook is still bearish from market participants' point of view. And again, how should we trade? So we should trade, we can expect a big trend if the S1 pivot is broken, or if R1 pivot is broken upside. Along with that, you can mark the key levels. These are the selling areas. This is the buying area, piercing pattern. This is one more buying area. I mean, these the in-between buying areas are scalping opportunities. So the high chances of making big money is when you catch the price action at the top or at the bottom. How does Bank Nifty CPR? Bank Nifty CPR we did not review, right? Yes, Bank Nifty is ascending CPR. So Nifty has descending CPR, Bank Nifty has ascending CPR, and as long as both are in same direction, like Bank Nifty went up, Nifty pulled from S1 today, if you observed, right? From R1 it went up, and what did we see in Nifty? We from S1 moving up. Now similar to this, we have to see the same direction. If Bank Nifty corrects and Nifty cracks below S1, you have a great opportunity to go short and make money. Or if Nifty cracks above R1 and Bank Nifty just gives a gap up and continues to move, then you have more opportunities upside. But I am of the opinion that the Bank Nifty is running out of fuel, and we might see a correction either tomorrow or within this expiry. Correction in the sense, not a huge fall, similar to what we saw in Nifty. We might see some kind of correction where price comes down, which would be a buying opportunity. Let's see how it goes, guys. That's all from my end. Thank you.